Is there volume? What's going on here? No volume? Is there volume? What's going on here? No volume? Okay, I got volume. Oop, got volume here. And what about on the YouTubes? Is it streaming on YouTube? Huh. Okay, why isn't it working on YouTube? Let's see. Oh, live now. Okay, sweet. Go ahead and mute you. And we'll give everyone a few minutes to jump in. I'll send out a tweet. We are live. How can I watch on YouTube? Do you follow me on? If you follow me on Twitter, I posted a link. So we'll give everyone like 5 minutes to get in here, and then that way I don't have to be, don't have to repeat myself. Uh-oh. Is this not live anymore? What's going on? Is it updating in real time? Do you guys see a live feed of my screen? Or like what? Okay. Oh, it's delayed. All right. Let's go ahead and get started here. Let me send out a message real quick. So close this. Close that. Okay, so as you guys noticed, Bitcoin made a new all-time high today. Let's go ahead and talk about where it's going next. Where is it likely to top out? What are most investors having their eyes on in terms of taking profit? And what is the macro trend doing in terms of the Bitcoins? So first and foremost, let me go ahead and say, I'm on TradingView now. So I've been publishing my ideas on there. Let me just show you my little page here. So, in the times that I'm streaming a lot less, but I'm actually putting out a lot more content because I'm releasing my ideas that I think are taking place in the market. And, you can watch them play out in real time. Like, for example, I posted this little up thrust prediction, this macro channel that we're trending in, stuff like this. That's like, stuff that like I'm keeping an eye on as like key price targets and price action. And I've been publishing them on TradingView. So, if you're not on TradingView, this is my, if you're on TradingView, this is my account name, and you can just follow me there. I don't post so much on Twitter just because it kind of gets annoying, and there are a lot more trolls on Twitter than there are on TradingView. But yeah, can't please everyone. But I'm trying to, for the people that are actually interested in trading and having intelligent discussions, I'm on TradingView now, and yeah, well, we can have some good discussion and share market ideas on there. So right now, if we're looking at Bitcoin, let's go ahead and zoom out. Let's put this whole market into perspective here. Let's look at the the 3-day. Okay. Ooh, this is about to get messy. Let's get rid of you. And let's just look at a different. Let's look at Coinbase. Clean your chart. Okay. So if we're looking at Bitcoin on a log scale here, we see that it's been in an ascending channel for a while. Wait, is it in log view or do I want to be on? Oh, it's in log view. Okay. It's been an ascending channel for a good bit. Let's see if I can remake it here. Well, this is interesting. This doesn't fit Coinbase as well. I wonder why it doesn't fit Coinbase as well, because it fits Bitfinex perfectly. Let's go back to Bitfinex. So if you look at Bitfinex, I'm not sure why there's such a big discrepancy, but we'll go ahead and look here. There's been a macro ascending channel on Bitcoin since basically since October of last year, and it's been obeying it quite nicely. And you can see here that it's been going through a series of peaks and valleys along this trend line, and we're coming up to a peak shortly. Where's my pen? Okay. So if we look here, I'm gonna go ahead and draw on this. So if we look, it's not what we want. Let's get black. Yeah. So if we look here, the market kind of goes through these cycles where it goes up. You know, it peaks out of this channel, it goes back down. Peaks out of the channel, it goes back down. Peaks out of the channel, goes back down, you know, etc. And it does this over and over again. And right now we're on our way up to our another intersection with this channel where it is likely to turn back down. That's not to say it's not going to penetrate and keep going up forever, but you know, considering it's done at 1, 2, 3, 4, 5, 6 times before, that's, you know, this is going to be a point of interest for traders here that are looking to take profit. So expect some heavy resistance along this channel line and expect a lot of effort to break it and continue upward before a correction happens. It's also important to note that these are 1 day. Ooh, sloppy handwriting. It's also important to note that these are 1 day candles here. So every candle here is 1 day. Okay, so this is on a macro time scale. And you know, we're nowhere near the top of this channel yet, but you know, we're approaching it. Okay. So let's take a look at what that leaves us at right now. So currently we well, let's look a little closer. So let's go 120-minute view. And I'm going to talk more about this these little words that I have here in a little bit, but for right now, what's important to note is this volume here is just humongous. This is huge. In fact, it is much larger than the majority of the 60-minute candles in its immediate vicinity. So that's crazy. Okay, another thing to note is that there are 2 of them side by side. And what you see here, if you're thinking about like effort versus result, which is something that Wyckoff talks a lot about, you see that here there's a lot of, so the first candle, a lot of effort and a lot of result. So what does that mean? It means that a lot of volume went into the market and it pushed the price very high. Okay, then the next candle, more volume, but it barely moved the price comparatively, right? So this moved from here to here, which is, what is that? 6 grand. So this is like a $400 move. So this first one was a $400 move. The next one was only a $200 move on greater volume. So if you look here, oops, $200 move, go here. So this guy is this one, and this guy is this one. So all that means, does that mean something catastrophic is going to happen? No, it just means that, you know, it just needs to take a break for a second. People are trying to push the price too high, and it's gaining little result, which means that there were a lot less sellers in this candle, and now there are a lot more sellers in this candle. But overall, it is starting to consolidate, and it's apparent on the 5-minute scale, for example. So if you look at the 5-minute scale, we see consolidation right here. So we see a peak in price here, which goes up, right? And it's consolidating in this little, like, maybe bear pennant, bull pennant, bull flag, whatever you want to call it. It's kind of bound here, and you can see it's consolidating because the volume is starting to taper down as the price kind of just goes sideways, and it's just chilling on this fib line here. So we've got a little pull here. Let's make a little price prediction here. So we got a pull, which is, what is that? 450 bucks, or what is that? Sorry, $400. $400. Oops, $400. That's the pull length. We've got this little trend line here, which, if we're trying to be accurate, we can probably say this is more of a bull flag here. So what we can expect is a $400 breakout from wherever it breaks out from here, which is going to be approximately, let's just say $6,000 to be conservative. So $6,000 plus $400 equals 6,400 bucks, which equals our next price target of this consolidation pattern. And for those of you who aren't familiar with consolidation patterns, this is called a bull. Jesus, sorry guys, my handwriting is so bad. Bull flag. Okay, characteristics of a bull flag is a sharp increase in volume leading up to a price peak. Usually there's a volume climax there, and then the price doesn't immediately shoot back down. It kind of either goes sideways or it kind of trends down slightly. But the key characteristic here is the tapering off of volume as it finds a middle ground. So one thing also to note is that typically in bull markets, bulls like to, let me go ahead and close this real quick. Bulls like to retrace 38%. So, oops. So typically in a bull market, they like to retrace 38%. So what does that mean? It just means that, like, what I've noticed over time is that as bulls push the price upward, if it's going to be a continuation pattern, usually they come up, they test, they fail to test, they come down to the 38, and then they continue. So I'm expecting to see a good entrance for a long around the 5,800 range, which is where the 38% is. And then from here, this is where I'm going to decide if the price is going to go down or it's going to go up. And that's just based off what I've seen from strong moves. You like to consolidate around the 38%. Okay, so where does that put us? So if we've got a price target of $6,400, where does that put us? Let's go ahead and look back at our ascending channel that I drew out. Well, 6,400 bucks actually puts us right near the edge of this channel. Okay, because this line right here, I don't know if you guys can see this, but this line right here is 6,500. So we trace it over. Here's 6,500. So in here is right around where that bull flag has us intersecting with the ascending channel. So things are about to get really interesting as it makes another run upward. I'm not guaranteeing another run upward, but it's looking likely. Strong consolidation, very strong volume up on the breakout, and I would be very surprised to see a pullback here. Okay, so I said a lot. Let's go ahead and let's look at some questions from you guys, and hopefully I'll be of some use. All right. No questions? Oh, okay, here's a question from the Discord. Oh, no question there. Yes, talk about Ether and the crazy price action. Okay, well, let's go ahead and talk about this Bitcoin stuff first, because it's going to drive the market. He's being sarcastic, by the way, because Ether is just tanking. Or not tanking, but it's not rallying. Okay, no questions about this? So I'm about to start talking about some market theory about what I think is happening and where I see the price going. All right, no questions about that. Cool. So for those of you who have been following me for a while, I like to talk about this Wyckoff schematic. It's called, I'll spell it out for you. It's called Wyckoff distribution. And all that is that you can think of the market going through phases where the price goes low, the price goes high, the price goes low. And so there are phases of accumulation where people are buying, big people are buying, and there are phases of distribution where latecomers to the trend are going to pick up, so guys that are in the accumulation zone, right? They're going to buy, the price is going to go up, and then it's just going to start tapering off. And then these guys that bought down here are going to start unloading their shares, their coins, you know, whatever you're trading, onto the latecomers to the party. And then ultimately the price comes back down, and this happens over and over again. You know, just swings high, swings low, and this just keeps going indefinitely, really. So right now we are seeing what I believe to be another distribution phase. And I mapped this out like a couple days ago, and it's been pretty nice. So right here we see the preliminary supply, we see the buying climax here. The buying climax is noted by the peak in volume. I'm kind of just calling this whole thing the buying climax. You see the automatic reaction, the sign of weakness, and now we see the up thrust, which is a sudden shove above the all-time high to create a new all-time high and kind of spark some FOMO in the market so that people start picking up and buying. And basically the whole idea is that this guy Wyckoff, I forget his first name, I should probably know it, but he over years, you know, back in like the 1930s, he observed market dynamics, and he observed the actions of big players, guys like JP Morgan, you know, like big institutional investors, and he observed what they were doing in the market and how they were trading and how the trends reflected that. And part of what he noticed is that the market, so whenever you hear people say the market is making a test, or there is support here, or there is resistance here, you can think about it as like the guys who really drive the market, the quote unquote market makers. They're testing the market to see how far the price will go before they're going to say, okay, I'm going to bail on my position, you guys can have it. And so part of the whole process of distributing their assets is that there are these series of tests, right? So there's it always starts off like this. There's like this preliminary supply phase where there's a little bit of pullback. And this is where this is the first sign of weakness in the market, is when supply is over dominating the demand. So, you know, if you're thinking about this little scale, right? Supply versus demand. In a sideways market, they would be equal. In a downward market, the supply would be greater than the demand, and in an upward market, the demand would be greater than the supply. So right now, this little test where it peaks out and kind of pulls back, this is said to be the preliminary supply test, where this is a signal to the big guys, the big institutional investors, that the supply is starting to dominate the demand. So they start prodding the market to see how far they can drive the price before ultimately it reaches its peak, and then they can bail on their position. So that's why you see things like this, where it's just like out of nowhere, just huge market buys, out of nowhere, just huge market buys. And it's these, these big guys, these large institutional investors, these large like hedge fund managers and such. They're I don't want to say manipulating the market, because I hate that term, but they're they're testing the market to see how far their influence stretches and how likely they are to make profit at different price levels. So you see this preliminary supply phase, the market pulls back, and all of a sudden there's just like this huge spike in volume seemingly out of nowhere, right? The price is it's very slowly just like meandering upward, and then it slows down, and then boom, huge increase in buy volume. So it goes up, and that's when you reach the buying climax. Okay, so this is the first test. This is to say, okay, on our first test, this is how far we got. And then there's a knee-jerk reaction in the market. They're like, oh, people freak out. They're trying to call the top, and then they sell. This is called an automatic reaction. And what the automatic reaction does is it's seeing how strong the bears are versus the bulls. As the automatic reaction kicks in, it's basically a test of the market sentiment to see how confident people are in these prices, and it develops this nice support level here, this blue dotted line, and then from there, it bounces up and it kind of meanders upward again, and until ultimately, the institutional investors make a test of the absolute low, and this is called the sign of weakness. So they say, okay, we saw how low the bears are willing to push it. Let's see how far we can push it before the bulls step in. So they say, okay, here's the bear low. Let's see how low the bull low is. So they shove the price down, but just to see how low the bulls will buy. So they shove it down, and the bulls buy, and it rallies. And you can see here that there's a strong buyback, but it kind of tapers off until boom. This is when the upthrust kicks in. A lot of times you see a revisit of the automatic reaction zone. That's why I have this dotted line here, but it's not always necessary. Typically what you just see is you see a sudden injection of volume into the market where it shoves the price higher to a new all-time high, which is what we're seeing here. All-time high. New. Hot off the presses, right? And this is called an upthrust. It's called an upthrust because it's like, imagine you're pushing this boulder up a hill. I love this analogy, but it's I feel like it's really perfect. So you have this boulder, you're rolling up a hill, you're like this little man, you're like, this boulder's really fucking heavy, right? And as you start pushing it up the hill, it gets harder and harder the steeper it gets. And then ultimately, it's not a gradual pressure anymore. It's, you keep doing these shoves. You're shoving it to get it up higher until ultimately you give it one last shove, and then the boulder just kind of steamrolls you back down the hill. And that's what you can think of as right here. It's like we're getting to the part of the hill where it's getting very steep. The institutional investors can't really hold it up anymore, and so they give it one last shove to spark some FOMO until they sell off all their shares, and then the price just tanks. Well, it doesn't tank, but it goes through a corrective phase, And if we go back to our ascending channel, that's not what I wanted. If we go back to our ascending channel, we see that this just happens over and over and over again. It's like clockwork. So let's go ahead and I'll point it out here. So if we look here, I can't zoom in on this. Let's look at the 12-hour. Okay. We'll go back through an historical example and check it out, because this happens over and over again. So actually, let's look at 6-hour. Actually 4-hour. So let's go back to a previous market activity where we can observe this, and we'll just compare it to the current price action. So we see here the price finds a bottom, it pushes up, and then you see the buying climax. Okay, so this is your BC. Let's make this smaller. Here's your buying climax. Here's your sign of weakness. Right, the price meanders, and then boom, upthrust. Your UT. At upthrust, and then right in here is when you start seeing these little, these tiny upthrusts where just people are shoving it upward. They're trying to stop out the bears. They're trying to push it. They're trying to squeeze that last little bit of juice out of the fruit before they just unload all their assets. And this just happens here. So boom. And this is over a series of, days from here to here. And is this a better color? Yeah. Okay, and then it bottoms out, and it kind of goes through this distribution, an accumulation phase. And so let's take a look. Happens again. Okay, so let's see. I wish I could just cover this. Oh, can I do that? Oh God, TradingView is awesome. Okay. So we see this over and over again. So here's another all-time high, and it goes to the same phase. Okay, so it finds a bottom here. The price kind of meanders upward, right? Here's your preliminary supply. Here's your PSY. Here's your preliminary supply. It goes back, and then boom, price shoots upward, and this is your buying climax. Okay, this one has a second test of the buying climax zone, and then ultimately here's your sign of weakness right here. Sign of weak, SOW. Your sign of weakness. Price meanders, and then boom, here's your up thrust one more time. Up thrust. Okay, the price sees how high it can push upward, and it starts making its way down to find another bottom, and it does the cycle over and over and over again. So right now we're in that phase. Okay, so if you're comparing it to a previous market, we are right. So here's resistance. We are right here. That's where we are, right in here, right there. So if I were a betting man, and I am, I'll be willing to bet we're going to see another strong push up to the upper boundary of our macro ascending channel, and we're going to see a price target of approximately 6,400 to 6,500 before a major correction like this starts to inject into the market. So we got a couple more days of bullish activity before the bears kick in, and it's gonna be sudden and violent. But the way you're gonna know the market is reversing is this whole idea of effort versus result. And I love this. I love this this line of thinking is that, and it works on the bottom, it works on the top. So the effort versus result. Okay, so it's going to typically be a volume climax or a relative high in volume versus the result. So if you see, just like I was saying here, if you look at the 15-minute chart, you see as the price goes up, the volume goes up, but the candle size gets smaller. It gets smaller here as the price goes up. So keep in mind, don't get greedy, but I would be willing to bet that there's gonna be a lot more there's a lot more squeeze left in this bull market before it corrects, and just try not to be the guy that tries to call the top and then get stopped out of your short. The trend is your friend. All right. So I just said a lot. I'm aware that I just talked your ear off. Questions, please. Let's talk about it. All right, so from the YouTubes, Wyckoff assumes institutional investors. We don't have that in crypto yet, mostly due to custodial risk. Also, Wyckoff distribution is not a 2-hour chart pattern. Well, first of all, institutional investors are 100% in crypto. That's not true, because I know some of them. And Wyckoff distributions work on, they just work on the macro trend. You want to see them on the macro trend, which is how we're seeing them played out. So people shouldn't be buying right now. I'm not going to tell you what you should and shouldn't be doing. All I'm saying is that there's going to be another rally to about 6,500 before you see a macro correction. Right, I've been following, however, wondering what effect the fork and the PBC papers might have on this. I don't know. I really don't know how the fork is gonna affect this. I really don't know. Okay, so something else that I noticed too is that every time Bitcoin's about to go through a corrective phase, you see the altcoin market cap start to drop. And that's just because the money that people are wagering on alts as Bitcoin starts to go up, people start throwing it at Bitcoin because they think it's just going to go up forever. And then ultimately goes to this corrective phase, the alts rally, and it goes through this over and over again. So just as anecdotal evidence, when you start to see the alts see this a strong inverse relationship to Bitcoin, usually that means that the money is shifting over to Bitcoin from the alts, and it's probably not a good time to be buying alts because it goes, you know, you can get them cheaper on the rally. All right, another question. All right, from the Discord. What are your thoughts on this being an inverse head and shoulders on Bitcoin, neckline around 5,800 and bottom at 5,100? So he's talking about this guy. I'm assuming you're talking about this guy. He's asking He's asking what do I think about an inverse head and shoulders like this? So boom, 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 something like that, where it goes up. So typically inverse head and shoulders are not continuation. They can be continuation patterns, but they're very rare. But let's go ahead and humor this and let's see what a price target would be. So if the neckline's like that, the peak would be from here to here. So what is this, 5,700 to 5,100? So it's $600 move. What's $600? So plus 5,700. Yeah, I mean, it's that yields the price target that, you know, I'm calling for based on the Wyckoff distribution. So that lines up. So that's about like 6,300, which is, you know, this is less than the $6,500 prediction. Sure, I'll play ball with that. Another question from the Discord. What are your thoughts with Bitcoin Gold coming out and timing? Oh, I already talked about that. Weren't some of the big sell-offs legitimate and FUD based on Chinese exchanges closing? Jesus, let me reread that. Weren't some of the big sell-offs legitimate and FUD based on the Chinese exchanges closing news? No. So Bitcoin actually started pulling back. The last all-time high, Bitcoin started pulling back before that. So this is when God damn it. This is when the Chinese, it was either here, I forget, it was either here or here when the news about Chinese exchanges came out. But Bitcoin was already like seeing a massive correction from here to here, a failed rally, and he was already on its way down. You know, this is when the news came out, was right here. So no, I don't agree with that idea. All right, questions from the YouTubes. Let's see. Hedge funds are getting in. Okay, hedge funds are getting in slowly, but institutions are not. That's not true. That's false. Institutional investors have been in the market for the past 2 to 4 years. I know that to be true because I've spoken to them. I know that's true. Question from Twitch. Besides effort versus movement, which candle types should we look out for to find trend reversals? Okay, so this is a great question. So he's asking what candle types, and for those who aren't familiar with that, there are reversal candles that we can look for that signal the end of a rally, or the reversing. Let me see if I can find some for you. So, are they really not? Is it 12-hour better? Let's see. Okay, so, oh, come on. 6-hour? Trying to find a quick example for you guys. One day. Aha, okay, here are a couple. So this idea of effort versus result is reflected in the type of candle. So this guy right here, for example, where it looks like this, it's like a line. You probably see these all the time. This is called a reversal doji, sometimes called a long-legged doji, depending on how long the wicks are. But a reversal doji is a visual representation of this effort versus result. So if you see high volume, but you see very little price movement, which is represented in the body of this candle here, this is a great example of effort versus result, which typically signals a potential reversal. It doesn't guarantee a reversal, but it signals, you know, an even battle between the bulls and the bears, which can typically signal the end of a rally. So like if you look here, for example, you see a reversal doji right before the pullback. You know, it's showing weakness in the confidence of the bears. It's this guy right here. It's showing confidence in the bears and weakness in the bulls. And likewise here, this is showing a potential a bullish reversal from this bear market. So this idea of effort versus result is manifested in the different candle types. And I'm not going to go over all those because, you know, here's another great example here too. Reversal candle, effort versus result, high volume, very little result in terms of price, open and close. So, you know, if you want to look more into that, I highly recommend looking up your candle types. That's like trading 101. You should really have that off your cuff. How do you see Ether in the short and midterm? Okay, so I'm going to talk about Ether shortly. So on TradingView, what indicators would you find useful to keep an eye to spot the turn of the trend? So I'm always a big fan. Okay, so I'm a big fan of using Bollinger Bands. I'm a big fan of using RSI and MACD, but I always recommend using volume to confirm everything. I'm a big fan of using volume to confirm trends, to confirm reversals, to confirm continuations, things like that. Volume is going to be your best friend. And one of the more powerful tools is on the 60-minute scale. Let's go ahead and pull this up. The 50. So this is the 200 EMA. 200 EMA, and this is the 50 EMA. Oops, EMA. And what the EMA is exponential moving average. A great tool. It gives you an overall standing of where the market is relative to the moving average. So if the market is trending below the 200 EMA, you know, typically that's showing bearish sentiment, and if it's trending above, it's showing bullish sentiment. And we can go through the past and take a look at it. So if we look at previous runs where we went through a corrective phase, you've probably heard this term before, but like you hear a golden cross like this, golden cross, or a death cross. And what a death cross is when these cross here, and what a golden cross is when they cross back. So typically what the death cross shows is it shows a changing of tides between the market, and it usually signals the end of a bullish rally, and likewise the golden cross signals the end of a bearish rally. So here you can see, you can imagine that trending below the 50 EMA is quite bearish, but trending below the 200 EMA is very bearish. And these are just two levels to keep yourself in check when you're thinking, oh man, this market's doing great, or like this is just, you know, blah blah blah. Like, instead of trying to convince yourself of something, check yourself on the EMAs, and it provides a nice objective view of the market. And also historically, there's like great support points. So if you look here, like it usually pings off of this as support, and likewise the 200 EMA is usually major support or major resistance, depending on what kind of market you're in. So if we go back here, we see that the 200 EMA was very strong resistance, and then ultimately it broke above it, and then we entered the bull market from here. So it was kind of fighting with this resistance here. It, you know, dipped below, dipped back, and then as it crossed above, we entered a strong bull market that rallied up to 6K. So the one best resource of Wyckoff method you would recommend for someone wanting to jump into this? Sure. I'll post a link right here. I think this, I don't really like stock charts website all that much, but I think what they put out a really good overview of Wyckoff theory, and it's a great introductory into that. So here's that link for there, and I'll post it in YouTube as well. All right, some more questions here. Okay, these guys are just debating that. Okay, so I talked about the overall macro trend. Let's look at a couple markets and see what the hell these guys are doing. So Bitcoin consolidating, cool. We talked about that. Litecoin is consolidating. I think Litecoin is going to be a really great play if Bitcoin breaks upward, just simply based on the fact that during the last rally, so this is where Bitcoin broke up and it made it its first all-time high around 6K. It was like 5,900 or whatever. If you look here, Litecoin actually had a stronger rally than Bitcoin did. It was almost a 40% move. So I think if Bitcoin pushes another upthrust before the correction, I think Litecoin has a lot of room to grow. And it actually rallied the same percentage that Bitcoin did on this last rally, and it's consolidating just the same. So we see some great consolidation here, and it's just waiting for Bitcoin to give it the handshake and the A-OK that it's okay to move upward. But Litecoin's looking bullish right now, and I think it has more room to grow than Bitcoin does percentage-wise. Ether is looking a little rough right now. Ether is just taking a fucking beating right now. So Ether, remember going back to what I said before about the golden cross and the death cross. If you look here, Ether had a death cross right in here, and while Litecoin and Bitcoin rallied back above, Ether just kind of hung out below, and it's finding resistance on the 50 EMA and hasn't even come close to testing the 200 EMA here. So Ether is just hanging out, and I have to imagine that if Bitcoin shoots up again, and it corrects, that Ether is going to absolutely just eat shit here. Okay, other currency pairs I'm eyeballing here. I'm eyeballing Neo. I'm eyeballing Neo. I think Neo is going to be a great play in the future. Right now it's kind of choppy, but if you look at the 4-hour chart, wait, oh, where'd my trend line go? I had a cool well, all right, where did that go? I had a little triangle on there. I gotta refine this. Okay. So if we look at the 120-minute candle pattern, this is like so choppy in there. But what we see is, let's go ahead and make this a little bigger. On Neo, we see it's making a descending. Sorry guys, my brain just like stopped. It's making a descending triangle. Here's the hypotenuse here. It's going down. Well, I decided to draw that. So here's the hypotenuse right here. It's trending downward like so. Here. And here's the base of the triangle right here. So Neo's got a pretty big price target depending on which way it breaks. I'm not a big favorite. I'm not a big proponent of using triangles to dictate direction. I'm just going to prepare myself for a breakout either way. So if Neo decides to break out to the top or bottom, we can expect a $12 move. So significant move, either upward or downward, depending on how it breaks. My guess is that if Bitcoin goes to have a corrective phase, it actually breaks upward. It's been really holding strong at this support level, so we're going to see I'm guessing, but always prepare for both sides, a $12 move upward, which would be 30 plus 12, which equals $42. So Neo is going to be a great move. What else? Are there any coins in particular you guys want to look at? Any altcoins? I'm feeling squirrely. Let's go ahead and go through some altcoins if you guys want to look at some. You guys want to look at OMG? Okay, so OMG, USD, Bitfinex. Okay, I actually haven't looked at this in a while, so let's go ahead and look at the 6 hour. Okay, so 6 hour looks like a big descending triangle. Something like that. Which does not look good for OMG right now because it's like flirting right with historic support. And fun fact here, guys, if you guys are new to triangles, typically they like to break out 2/3 the length. So if you're looking at like this to be the length here, you can call this L. Typically, triangles like to break up or down at 2/3 L. So it's right about to have a breakout, and it might be breaking down, which is going to be a pretty big move. What is this move? This is going to be $6 move, which that would be devastating to OMG. Or it could shoot up, so it could shoot upward, you know. But $6 move for OMG. XRP. So I stopped charting XRP, honestly. Like, XRP does not trend. It kind of just like does its own thing, and you just gotta hope that you're right. We can Zcash. I've actually never, I haven't actually charted a Zcash chart. Let's do, where's Bitfinex? All right, so Zcash. Ooh, this chart looks like shit. Okay. Whoa, had a major rally here. Was that I would imagine that's news driven or something. Okay, so Zcash. Not really seeing anything here. I mean, we're seeing volume. No, I don't really know what we're seeing here. This is kind of like chop. It's kind of just chilling at like 220. I don't see anything. I don't see anything that's like going to indicate. So, okay, so we're seeing a 12-hour Bollinger Band squeeze, which means that a breakout is likely to come. Where that direction lies remains to be seen. You guys want to look at, okay, we can look at QDM too. Is QDM not? Where's Bitfinex? Whatever. Bitchex. Oh, cool. I don't really see anything trending here. Yeah, QDM is just kind of just chop. I don't know. So I was actually looking at I don't even know what AVT is, but I was looking at it this morning because it had a huge rally. It's one of the few Bitfinex pairs that didn't just get destroyed during Bitcoin's rally. Let's look at the 15-minute. Or let's look at the 60-minute. So AVT is, let's look at the 30-minute. AVT is currently sitting below the 200 EMA, but it looks like it's fighting to regain support here. I don't know. I don't see anything trending per se. It's kind of just chop. I don't know. Anyway, do you guys have any more questions about the macro Bitcoin scale? Because it's going to that's what's going to determine the market. So keep an eye on that. Someone was saying, sorry, someone was saying, look at Monero or XMR. You can look at XMR. Let's look at the 12-hour. Okay, so this is interesting. Okay, so XMR, let's look at the 1 day, 3 day, 1 day, 12-hour. Okay, so we see so if we're looking at Monero, just going off my initial glance on this thing, we see volume consolidation throughout the length of this little bro here, and then we also see a bit of a Bollinger Band squeeze. But the most important thing to note here is that this 200 EMA is still providing support, and the 50 it's currently oscillating around the 50. So if you're trading Monero, it's going to be really important to see how it reacts to this as Bitcoin rallies or whatever it does next. It's important to watch what Monero does regarding this 50 EMA here. That's the 50 EMA. That's going to dictate where it's going to go in the near future. But right now it's looking pretty bullish, and it kind of just looks like it's in a consolidation pattern. So here's another tip too. If you're not good at viewing consolidation with the volume or with the MACD or whatever, another way to view consolidation is just as you see a strong move, typically you see how this angle is widening between the 50 and the 200 EMA. That indicates a strong move, but also consolidation. You'll see the 250 EMA kind of converge about a point, and this is when when these converge. It's consolidation in the market. So that's another way to view a consolidated market. And the tighter these get, the closer they get, the more consolidated it is, and the stronger the move is likely to be on the breakout. So if you see a consolidated move where they come really close together, and you're like, okay, these are like basically overlapping, or they're very close. And then you see a sudden spike in volume, that's an indication that you're about to see a rally in a given direction, and you're less likely to see a fake out in a consolidated market. All right, well, that was fun. I haven't taken requests in a while, but oh yeah, so let me go ahead and show you guys some of the stuff I've been working on while I have you here. So I've been doing a weekly video every Tuesday. I've been putting out I call it Technical Tip Tuesday, and last week was MACD divergence. I talked about MACD divergence, and the week before was RSI divergence. So you can see this here on my channel if you're interested in doing that. And it's just a great way to up your game and make sure you have down the fundamentals of like basic indicators before you start trying to learn the more advanced indicators. And as the series progresses, I'm going to start increasing the level of proficiency with the indicators and the strategies. Like I'm gonna start going into patterns pretty soon. But yeah, it's just basically I'm trying to build a repository for trading tools, so that if someone's like, oh yeah, how do you use the RSI again, they can go back and reference the video, or they're like, oh, well, like MACD divergence, is this diverging, blah blah blah. So I try to cover all the nuances in the RSI and MACD videos, and I'm not sure what I'm going to cover for the next one, but yeah, that's going to be the goal, is like to build a nice little library slowly but surely. And of course the Bitcoin market recaps. This whole video I'm just going to throw up on YouTube after this, throw up a whole recording. And yeah, what else? Oh yeah, so if you're interested in joining the Discord we have here, I'll go ahead and show you that too. It's a little community. I say little, but it's got a couple hundred people, and it's a community of traders, some really good traders. But it's it's not exclusive to just advanced people. It's great for newcomers, but we've got it broken down, and I'm making a lot of changes to the Discord over the next couple of days. So look out for that, and yeah, so I'll just give you like a couple of a quick view of it if you're interested in joining. So we've got the Bitcoin analysis where people they post their charts, and we have like a group discussion about it. Same thing with Ether. We have the coin of the day, Litecoin. And a lot, like, and specifically with the Wyckoff distribution, we've got a group discussion going on here about the Wyckoff distribution, and just a lot of great material, a lot of great people to bounce ideas off of, and it's just a great like way to aggregate other people's sentiment, so you can see if you're not alone with your opinions, and make a more informed decision with your trades. So if you're interested in doing that, check out my Patreon link down below, and yeah, you can get access that way. All right, anyway, so that's all I got for you guys. I feel like there was a really good discussion going on. And keep an eye out for the Bitcoin upthrust. Profit target's going to be about $6,500 for that move. And then keep an eye out for a market top going into a corrective phase as the volume spikes. And then price doesn't start to move. That's going to signal a typical corrective, the beginning of a correction phase. All right? Well, you guys have a good weekend. Don't stare at charts too much. And I'll see you next Friday.